بالجميع في فيديو جديد عن Foreign Language 2. النهاردة هنناقش موضوع مهم جدا وأساسي مرتبط بالبارت P Accounting Issues in Budget Financial Reports. النهاردة هنتكلم عن جزئية مهمة قوي مرتبطة بقضايا محاسبية، تحديدا الميزانية والتقارير المالية. Let's begin and concentrate on that. Accounts oversee the financial records of a business and make sure that data is correct. Then, they use this data to create budgets, financial documents, and reports. They can make sure the money coming into the business works with the expense required to operate. المحاسبيين أو الناس المرتبطة بمجال المحاسبة عادة لها حاجة اسمها تسجيلات أو سجلات مالية، بيبدأوا يعتمدوا فيها على مجموعة من البيانات. أهم حاجة إنها تكون صحيحة، لأن على أساسها بيخلقوا البادجتس اللي هي الميزانيات، financial documents الملفات المالية and reports والتقارير. وبالتالي ده اللي بيعمل make sure the money coming into the business works. ده اللي بيأكد إن في فلوس جاية للمؤسسة أو المكان الخاص بالعمل. with the expenses required to operate. طبعا مع حساب التكلفة اللي احنا هنشتغل بيها علشان نبدأ نوصل مثلا مكاسب أو أرباح وخلافه. Accounts might review cash flow statements for operations or an income statement for an upcoming board meeting. They can also attend meetings to offer advice on the company's finance. Other common activities include collecting new financial data, reviewing or updating past records, collecting evidence for audits and other legal proceedings, computing taxes, checking on compliance with relevant laws, making sure tax payments are on time, forecasting and risk assessment. الشغل الخاص بنواحي المحاسبة عادة بيقدم من خلال قوائم بتحدد لي عمليات خاصة بقوائم الدخل وما يرتبط بيها كعمليات مالية وخلافه. طبعا كل الحاجات دي بتجمع لي بيانات مالية، بتراجع لي التسجيلات الخاصة بيها، بتديني ما يسمى بأدلة وبراهين خاصة بالمراجعات والعمليات الخاصة بالنواحي المحاسبية، تحسب لي الضرائب، تشوف لي التفاصيل بتاعتها، تتوقع كمان ايه هي المخاطر لما بنيجي نعمل عملية تقييم. There are types of accounting. عندي انواع من المحاسبة الخاصة النواحي المحاسبية. We have tax accounting, we have financial accounting, management accounting, forensic accounting, cost accounting, auditing accounting, international accounting, and bookkeeping accounting. في عندنا انواع كتيرة من المحاسبة زي محاسبة الضرائب، المالية، الادارية، التكاليف، المراجعة الدولية. كل نوع هناخده بالتفاصيل دلوقتي or we are going to talk about some details. Let's begin with tax accounting. Tax accounting involves maintaining and keeping tracks of your business taxes. They can include filing yearly tax, tracking spending and tax rates, as well as assessing employees with setting up tax forms. To do this type of accounting, you'll have to have a solid understanding of how to file taxes and of the tax code. You will need to comply with both federal regulations and the states in which operates your business. This is the first type, which is called tax accounting. Let's move to the second one, financial accounting. Financial accounting focuses on the value of the company assets and liabilities. These accountants make sure that the company's accounting follows the generally accepted accounting principles, which we will describe below. These accountants also work with the cash flow statements and balance sheet. If we move to the management accounting, the management accounting depends on management accountants who present financial data to stakeholders and senior leadership at the company. They play a greater role in reviewing what products or services a company needs, as well as how these efforts can be financed. Let's move to another type, which is forensic accounting. If forensic brings up image of NCIS crime stance, your deductive skills are up to par. Forensic accounting does require a certain degree of digging and deductive work. This type of accounts investigates and analyzes financial information for business. They are on the lookout for complaints, breaches, or legal activity. Forensic accounts are using their knowledge to audit organizations for financial misconduct. Let's move to cost accounting. Cost accounts create a constant record for all costs incurred by the business. This data is used to track where the company spends and improve the management of these expenses. They can find redundancy and places where the company could cut costs. Let's move to auditing. Auditors are accountants who specialize in reviewing financial documents to see if they comply with the tax law, regulations, and other accounting standards. These professionals evaluate organizations' financial documents to make sure that they are accurate and follow legal guidelines. If we talk about international accounting, international accounts focus on working with the businesses that operate around the globe. They know about trade laws, foreign currency rates, and the accounting principles of the other countries. Bookkeeping is a tactical financial process that includes recording and organizing financial data. That includes what being spent and what money of the business is making. This work can be done either by an accountant or a bookkeeper. Bookkeepers focus on tracking or tracing spent accounts, go point, advising leaders on what to do with this data. An accountant can be bookkeeper, but not all bookkeepers are accountants. Okay, let's move to a new topic related with accounting skills. احنا اتكلمنا دلوقتي على انواع المحاسبه المختلفه، محاسبه الضرائب، محاسبه الاداريه، المحاسبه التكاليف، المراجعه وخلافه. هنتكلم بقى علشان اشتغل في مجال المحاسبه المفروض ان يبقى عندي حاجه اسمها سكيلز، مجموعه من المهارات. Being a rockstar's account is more than just being good with numbers. You need a vast array of knowledge on tax code, financial regulations, and best practices for maintaining a healthy balance sheet. Then you need the soft skills to apply your knowledge to the real world. Here are some essential skills accounting requires. اني ابقى محاسب شاطر او تشتغل في مجال المحاسبه وتكون حد كويس، لازم يكون عندك معرفه بحاجات تانية غير الارقام بس. يكون في معرفه بالاكواد الخاصه بالضرائب، بالتنظيمات الخاصه بالنواحي الماليه، ويكون في ممارسات بقى بما يرتبط بالقوائم الماليه زي المراجعات وخلافه. You should have soft skills like لازم يكون عندك مهارات بقى اللي بنسميها soft skills زي listening اللي هي الاستماع. If you're on the prowl for an account, you want to find one that listens. They should understand what your business does and the expenses required for you to operate and any financial challenges you might have on your radar. If you're the account providing service, you will need to provide a listening ear to you. You can better apply the knowledge if you have a clear understanding of clients' needs. Then you have time management. Whether you are using in-house accounting services or working with external accountants, time management is an essential skill. Your team is faced with internal deadlines and audits. Reviews of your financial health need to be completed in timely way. If you are an accountant, remember many of your clients have will have the same deadlines. Tax day and the financial year are big marker for the organizations you work with. Make sure you know you can manage your book of business so no one needs fall through the cracks. Then you will have organization. For an account, you need to be able to offer time suggestions and recommendations to your clients, so you will need to be organized. Keep track of where information is for all of your different clients. That should include secure storage systems for all of their documents. As an account, you're dealing with sensitive information, you should have safe channels for transferring these documents so the data is safe from bad actors. Critical thinking. Sometimes you will have to think on your feet. There may be a lapse in the monthly revenue or too high a payment for employees. You will be expected to analyze information, keeping track of your story, your money tools, and providing guidance of what to do next. No matter the case, critical thinking is essential. While math skills are helpful, data and systems analysis are keys to success in this route. An accountant is often an investigator. This means that cursory and deductive reason skills are also useful. Understanding these skills can also assist business owners. If you have these abilities, you may be able to do a lot of your accounting yourself. If you need outside help, knowing these skills and that is will help you choose a valuable business partner. Then we are going to move to basic accounting terms. هنتكلم على بعض المصطلحات المحاسبية الأساسية أو المهمة زي debts and credits, accounts receivable and accounts payable, accruals, assets burn rate, capital, cost of goods sold, depreciation, equity, expenses, fiscal year, liabilities, profit, revenue and gross margin. عندنا مصطلحات مرتبطة بالنواحي المحاسبية كتيرة، منها المدين والدائن، الأصول، رأس المال، الأسهم، التكاليف، السنة المالية، الالتزامات، المكاسب، العائد. كل دي مصطلحات هنتكلم عنها بشيء من الإيجاز. Let's talk about debts and credits. Not to be confused with the personal debts and credit cards. Debts and credits are foundational accounting terms to know. A debt is a record of all money expected to come into an account. A credit is a record of all money expected to come out of an account. Essentially, debt and credit track where the money in your business is coming from and where it's going. Many businesses operate out of a cash account or a business bank account that holds liquid assets for the business. When a company pays for an expense out of the pocket, the cash account is credited because the money is moving from the account to cover the expense. This means that the expense is debited because the funds credited from the cash account are covering the cost that expense. Okay. There is an example, a visual example to understand the difference between debt and credit. المدين والدائن قدامنا بعض الأمثلة اللي ممكن تفهمنا الفروق ما بينهم. If we have debt, this is increased assets. If we are credit, this is decreased assets. Decreased liabilities in debts, decreased revenue, increase the balance of the expense account, decreased balance of equity accounts. All of these are debts. In credits, we increase liabilities, increase revenue, decrease the balance of expense account, increase the balance of equity account. So, sometimes we have decrease and sometimes we have increase. Concentrate on them because it's Important to know the differences between debts and credit. Let's move to accounts receivable and accounts payable. Receivable and payable. Receivable is the money that people owe for the goods and services. It's considered an asset on your balance sheet. For example, if customers fulfill their invoice, your company accounts receivable amount is reduced because less money is now owed. Accounts payable is the money that owe to other people and is considered a liability on your balance sheet. For example, let's say your company pays 5,000 in rent each month. Here is how to record that in your financial records before the amount is paid out. You write down the date, you write down the account. Here is the rent. You are going to debt by 5,000. Accounts payable 5,000. Okay, let's know that the value is paid. Here is how you record in the company financial record. You write down it account payable and cash account. Okay, then we are going to move to accruals. They are credits and debts that you have recorded but not yet fulfilled. This could be sales you have completed but not yet collected, payments on your expenses you have made but not yet paid for. Why not wait to record the activity until the payment is complete? We will answer this question while we are going to explain the accrual account method later. Then we talk about assets. Assets are everything that your company owns, tangible or intangible. Your assets could include cash, tools, property, copyrights, patents, and trademarks. We will move to burn rate. Your burn rate is how quickly your business spends money. It's a critical component when calculating and managing your cash flow. To calculate your burn rate, simply pick a time period such as a quarter or a year. Subtract your on-hand cash amount at the end of that period from your on-hand cash at the beginning. Then divide the number by the number of months in the period or by your choose cadence. Okay. Capital refers to the money you have to invest or spend on your growing your business, commonly referred to as working capital. Capital refers to funds that can be accessed like cash in the bank and don't include assets or liabilities. Cost goods sold. The cost of goods sold or cost of sales is the cost of producing your product or delivering your service. COGS or COS is the first expense you will see in your profit and loss P&L statement. Is a critical component when calculating your business gross margin. Reducing your COGS COGS can help in increase profit without increasing sales. Depreciation refers to the decrease in your assets value over time. It's important for tax purposes as larger assets that impact your business ability to make money can be burden of pays on your or on their depreciation. Okay, then we have equity. Equity refers to the amount of money invested by a business and its owners. It's also known as owner's equity and can include things of non-monetary value such as time, energy, and other resources. Ever heard of sweat equity? Equity can also be defined as the differences between the business assets, what you own, and liabilities, what you owe. A business with healthy or positive equity is attractive to potential investors, lenders, and buyers. Investors and analysts also look at your business EBITDA which stands for earning, before, interest, tax, depreciation, and motorization. This is the abbreviation EBITDA. E for earning, P before, interest, I, T taxes, D depreciation, and finally amortization. Okay. Let's move to expenses. Expenses include any purchases you make or money you spend in an effort to generate revenue. Expenses are also referred to the cost of doing business. There are four main types of expenses, though some expenses fall into more than one category. We have fixed expenses, are constant expenses like rent, salaries. These expenses aren't typically affected by the company's sales or market trends. We have variable expenses, associated with company performance and production, like utilities and raw materials. We have accurate expenses. They are single expenses that have been recorded or reported but not yet paid. These would fall under accounts payable, and as we discussed above. We have also operating expenses are necessary for a company to do business and generate revenue, like rent, utilities, payroll, and other utilities. Let's move to fiscal year. A fiscal year is the time period a company uses for accounting. The start and end dates of your fiscal year are determined by your company. Some coincide with the calendar year, while others vary based on when accounts can prepare financial statements. Let's move to liabilities. Liabilities are everything that your company owes in the long or short term. Your liabilities could include a credit card balance, payroll, taxes, or a loan. Right now, we are going to concentrate on profit. In accounting terms, profits, or the bottom line, is the difference between the income, COGS, and expenses, including operating, interest, and depreciation expenses. You and your business are taxed on your net profit, so it's important to proactively plan for your tax liability. Do this by staying on the top of your net profit amount, setting aside some of your revenue in a separate saving account, or paying your estimated tax every quarter, like employer withholding. Right now, we are going to talk about the revenue. Your revenue is total amount of money you collect in exchange for your goods and services before your expenses are taken out. Let's move to gross margin. Your gross margin or gross income, which in your total sales may use your COGS. This number indicates your business sustainability. Accounting basics. Right now we are going to concentrate on income statement, balance sheet, profit and loss statement, cash flow statement, bank reconciliation. هنتكلم دلوقتي على اساسيات محاسبيه زي قوائم الدخل والميزانيات والحاجات الخاصه بالمكاسب والخساره، قائمه التدفق المالي وخلافه. Let's begin. Income statement. An income statement shows your company profitability and tells you how much money your business has made or lost. This allows you to see where your money is coming in. Balance sheet is a snapshot on your business financial standings at a single point in time. Balance sheet will also show you your business retained earnings, which is the amount of profit that you have reinvested in your business rather than being distributed to shareholders. Many small business owners do a combination of bookkeeping and accounting. Let's move to profit and loss, P&L statement.
Profit and loss statement is a snapshot of your business income and expenses during a given time period, like quarterly, monthly, or yearly. This calculation will also be reflected on your business schedule, say tax documents. Cash flow statement. A cash flow statement analyzes your business operating, financial, and investing activities to show how and where you're receiving and spending money. Keeping track of spending and maintaining the business expenses in a detailed and organized fashion allows for deeper look into the company's spending and helps lower costs in an area that may not need as much attention. Let's move to bank reconciliation. A bank reconciliation compares your cash expenditure with your overall bank statement and helps keep your business's records consistent. This is the process of reconciling your bank balance to the bank balance of cash. By this, we have finished our meeting today, which we concentrate on a lot of topics, a lot of ideas, a lot of skills. You need to be a nice accountant and working in the field in a good way. لقاء النهارده كان لقاء متميز. الفيديو ده مجموعة معلومات كتيرة جدا، والمعلومات دي ركزنا فيها على أفكار كتيرة مرتبطة بأنواع المحاسبات والمهارات الخاصة بالجوانب المحاسبية، بعض المصطلحات وبعض القواعد، وناقشنا فيها كل التفاصيل الخاصة بالأكاونتنج ايشوز، وركزنا على حاجات كتيرة مرتبطة بالفاينانشال ريبورت. أطيب الأمنيات بالتوفيق. انتظروني في فيديو قادم. استودعتكم الله الذي لا تضيع ودائعه.